Major funding for these broadcasts has been provided by grants from New York Community Bank, AmTrust Title Insurance Company, Perfect Building Maintenance, M&T Bank, Customers Bank, Marks Paneth LLP, Ariel Property Advisors, Sterling National Bank, Capital One Bank, Collins Building Services, Meridian Capital Group. Additional support has been provided by grants from AVR Realty Company, Amerant Bank, Bank of America Merrill Lynch, B6 Real Estate Advisors, Briarwood Organization, Chase Commercial Term Lending, Chase Commercial Mortgage, Citizens Bank, CPEX Real Estate Services, Douglaston Development Levine Builders, Flushing Bank, Friedman LLP, Handler Properties LLC, Handler Real Estate, Hodges Ward Elliott INC, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, New York's Window Company, Matone Group, New Banks, Newmark Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rockefeller Group, Rosewood Realty Services, SJP Properties, Stonehenge NYC, TD Bank, Terra CRG, the Merengoff Family Foundation, and these friends. Oh, Crystal Apple, a present of Mr. Pirot, one of my guests. What does the office market look like in 2019, especially since we're in the new 19th season of the Stoller Report? So, Apple, I've assembled three people who really know what's going on. My guests, they include Scott Galin, who is the president and CEO of Handler Properties and Handler Real Estate, Brian Waterman, executive vice chairman of Newmark Knight Frank, and Jim Pirot, the Apple man, managing director, thanks again, of Cressa.
My pleasure.
Waterman, you've had a good year in 2019, right? You've had some interesting deals.
Right.
Is it a good time for a tenant? Is it a good time for a landlord? What's the reality, okay? Because certain people say to me, Stoller, you tell the truth. So I want the truth.
The truth. I think it's a market-by-market basis right now in terms of what's going on in the overall market. I think tenants definitely are commanding a lot of tenant improvement dollars and free rent in any concession package that they're getting, and they're driving, I mean, right now, 2019, the highest concession packages in the history of New York.
Can they get $100 a foot?
At least. Mm-hmm. At least $100 a foot plus base building work.
Correct.
Plus 10 to 12 months of free rent, depending upon where it is in the marketplace. You know, it's really a case by case in terms of the type of building, the location of the building, what's going to drive the highest end of that range compared to the lower end of that range. You know, right now you have 4 million square feet of tenants looking in Midtown South with very little availability. So that's going to be on the lower end of the range. Where there's larger availability, it'll be on the higher end of the range.
So where do you see, because you have a dual life, both of you in a way have a dual life. You're an owner and you run a company.
I think, as Brian said, in our tenant business, where we rep tenants, we're finding historically big concession packages on behalf of these tenants. And as Brian said, but not in certain areas, right, like Midtown South. In our owned buildings, we don't, you know, the packages aren't really packages. These are more built to suits. But having said all that, we're doing more work. We're giving a bit more free rent. And we're keeping occupancies high. We don't want vacant space.
You know, you have the WeWork, the Notel, the Regus. Are a lot of companies taking those options or signing leases directly?
Well, I think the Notel, Regus models are staying the way they are. I think that landlords are becoming more adaptive to the sophistication of the end user, and they're taking more space. When you say taking more, are they utilizing Regis space or taking more space? I think tenants and occupiers are becoming much more sophisticated in their workplace analysis of what is the right size and the right opportunity for them. But as we were discussing a moment ago, work letters, concessions, the numbers are going up. Occupiers are seeing that as an opportunity and becoming much more sophisticated to ask for certain base building work. Sustainability issues we're all faced with the mayor's challenge. These are all things.
Carbon emission situation.
Exactly. The 80 by 20 or 80 by 50, whatever football measurement you want to say before hike, there is a lot more of that happening to the sophisticated end user, and landlords are adapting to it.
There's a lot to learn from that too. I mean, I don't think anybody knows what the true impact of that's going to be on New York and development.
True. We've launched our own sustainability platform and technology platform just for that segment of
What
users.
about the convene idea and the use, the amenity package for the building? Is that really a major concession or an item that people are looking for when they're taking a space?
We see in some tenant deals we're doing where people say, forget the fountains and forget this, can you put us in an A-like building and we don't need a gym and a spa and a sauna.
Right.
So obviously in the buildings we run, BB plus, loft buildings, the amenities are elevators and things. So.
Well, at Park Avenue Tower, which Blackstone Equity Office controls and owns, we put an amenity center in there, a 15,000 foot amenity center. And
with what type of amenities?
Gym, food, conferencing, nutrition, I'm trying to think what else.
Yoga.
Everything, soup to nuts. 15,000 feet, we probably spent $15 million on it at least. And we think it generated 15 to 20% higher rents for that building. That building is probably the hottest building in New York right now in terms of the Plaza District type building. We have leases out for the remaining entirety of the building. And it's really performing much better than any other building in the marketplace.
So you're believing that these amenities have really helped?
100%.
There have been a number of industrial buildings, specifically in Brooklyn, Queens, and a couple in the Bronx, which have been converted to office space, where basically somebody used to have an industrial space for $25 a foot. The landlord wants $45 a foot. The loss factor is over there.
Right. Since
you see this on a more of a New York City exposure, how do you look at that type of market?
We're negotiating at the factory building. We have a couple 350,000 feet available space there.
The factory building, for my audience, is in Long Island City.
In Long Island City. Atlas owns the building, and we have leases out for about 250,000 feet of space there. Related at the Point, which is the old Blanchard building and Paragon Oil building, we're negotiating for probably 150,000 feet.
And what type of rent? Okay, that's the question is, are we talking about a significant savings in rent being in Long Island City or being in the boroughs, because there are the potential REIT benefits over there?
Anywhere from the low 40s in a factory type building to a mid 50s in a Paragon Oil type building.
And it's a different TI package.
And then after that, you get the incentive. So effectively, a tenant is paying virtually nothing to be in those locations.
But the big question, people hear that Brooklyn's hot, parts of Queens is hot. Are companies who are New York, Manhattan-based companies coming to Brooklyn or coming to Queens? Scott?
I think we hear it's hotter than it is hot. We're investors in those sort of buildings, both in Brooklyn and in Long Island City. And I would say overall, the results have been okay. But the momentum that we all talked about in 14, 15, and 16, I'm not so sure it has reached the level that we all hope for.
Right.
That would be my conclusion.
Right now, with the new One Vanderbilt, with the Midtown zoning taking place, the conversion one day of the Grand Hyatt, possible conversion of a couple of other buildings over here, the Chase Manhattan 277. Do we see Midtown, Grand Central as a hot area, especially with a potential Long Island Railroad coming in there, that you're going to have the Long Island Railroad as well as the Penn?
I think East Side Access is going to be a boom for that area.
Yes.
You look at One Vanderbilt.
I think we just signed 59% leased.
Yeah, we just signed the lease with that with Sentinel Capital Partners in that building. We represented them. You know, the rents they're achieving are remarkable rents for the building, but there's a demand from certain types of tenants for that type of product. There's not a lot of that product in Midtown.
I mean,
itself.
it's a quality, unique, brand new building.
Right.
Okay?
Right.
We're
Right.
talking about a stock of buildings in Midtown, with the exception of the building with Price Waterhouse Coopers. You know, nothing has really been built in the last 25 or 30 years in the neighborhood.
Very old building stock, and so they're buying technology and infrastructure, efficiency, ceiling height, you know, clear spans within the floor. Tenants want that today, and that's why the West Side has been so successful.
So let's talk about the West Side. Everybody hears about, Related Oxford.
Right.
They did a fantastic job. There's no question. They leased the space over there. But, you know, there is the other properties. SL Green has the new building over there where First Republic Bank is getting involved with. Then you have Brookfield, 1 Manhattan West, 2 Manhattan West. And then you have the Spire and the Spear and other buildings. Right. Are people looking at those new site developments?
So we're representing SL Green on that building on 34th Street that they acquired, where First Republic is going in. So rents in that building, we did about a 200,000 foot deal with First Republic. The balance of the building is about 350,000 feet of availability. We have 3 tenants that want the remainder of the building. The building's been on the market for about a month. And the rents that are approaching in that building are almost close to the same rents as Hudson Yards. Okay, and it's completely different types of products.
What about incentives?
Incentives, similar. Similar incentives, similar rents. And so there's a different buyer value for a tenant that wants to be in an old brick type building with real authentic type space compared to a glass and steel building. Certain tenants want one, other tenants want the other. But if you look at Hudson Yards, there's 15 million square feet of coming available by 2023. Yeah. Two-thirds of it's committed.
Right.
It's amazing.
But they all want, whether they're the bricks, the older converted buildings, right, to the newer, the infrastructure must be equal.
It must be equal.
The technology, the systems, the base building bones need to be upgraded to match. They're not going to get to the One Vanderbilt rents, of course, but the occupier is looking for that infrastructure, whether they're at One Vanderbilt or they're down in Flatiron.
What about Lower Manhattan? Where do we see Lower Manhattan? Are major companies moving down there? I know Health and Hospitals, but that was a government agency.
Right.
Okay, what about our law firms coming back to Lower Manhattan, our financial services? Because, you know, Deutsche Bank is coming uptown to the Time Warner Center and so on.
I was telling you in the green room, we used to have, in the tenant rep business, we would take them down there for cost alternatives. It was where you had to go when someone said, I want this, but I want to pay that. Right. They'd say, okay, we got to take you downtown.
Right.
Now, we have a whole bunch of people who say, where do you want to be? And I want to be in the financial district. Right. Oh, excellent. Yep. Right. So now it's not just a pricing model anymore. Now there are people that want to be down there. That's their primary reason is the geography. Okay.
You would almost preface it by saying, I can show you something downtown. And now no one says that. Right. Say, let's go look at downtown.
They want to be.
I mean, if you look, Park Avenue South, like I said, Midtown South has 4 million square feet of space users looking for space in that marketplace. They're going to end up somewhere, and they will likely end up downtown.
Right.
Are they going to end up in Times Square?
You can take that.
Since it's the birthday of the two of you.
Very true.
That's right.
Happy birthday.
Happy birthday.
Thank you.
Thank you.
A couple years apart, birthday. So let's talk about Times Square. There have been a number of articles written. There have been a number of tenants planning to move out. What do you see happening?
It has become and becomes more and more a difficult area to traverse, to lure user groups to that area. I think we were talking earlier about the vacancy rate alone could hit 40% within Times Square. So it is becoming you don't even want to say the next frontier. I think the east side is going to be more so of where opportunities are, but definitely in that
So
Times
in
Square
a
is
way, it
difficult.
could be like
Yeah,
Scott
difficult.
just said before about companies when they went to Lower Manhattan. If you want to get a low
Opportunity.
rent,
We heard last week someone say, "I'll show you something in Times Square if you want that sort of product."
Right.
Right.
And it's
Right.
like a value paradigm for some A buildings. We own a building on 40th and 7th, which is not, they call it Times Square South.
But it's
And
not Times Square.
It is not, because you can actually walk out of our building and walk back into our building. When we try to walk north a few blocks,
Right.
It's
you
difficult.
literally, you can't traverse, you can't cross a street, and then you have the Dumbos and the Big Bears and whatever they are,
SpongeBob SquarePants.
SpongeBob all over you. It's really, it's a victim of its tourist success.
Yes.
You know, the availability that may potentially come back to that marketplace is really along the 42nd Street, 43rd Street side.
The southern half,
And
right.
Durst has done a real good job at 4 Times Square of releasing that product. So at a price point,
right? Because, but
there's a
because
value.
it's- because
tenants will
it's,
take it.
Agreed.
it's at the edge. It's the open.
Right.
And
Well,
so are the other
right.
2 buildings that it will potentially.
And it's a
vacancy.
Boku building.
Right.
I mean,
So they're good buildings
Yeah.
that the potential vacancy is in. So there's opportunity there for a tenant that wants that type of product.
What about Third Avenue? I remember Third Avenue was an area, that people didn't like. It was a neglected neighborhood. I mean, I was in Third Avenue. Durst basically terminated all the leases at 825 Third Avenue. They're planning to rebuild it. Do you see Third Avenue companies going there?
not such a value anymore. We
Well, that's what I was starting to say earlier.
It was.
It used to be.
We were
but I
doing all these $55 tenant deals
Right, but
there.
I think with One Vanderbilt, it's
creeped up.
pushing and it's creeped up.
What's
so
Lipstick
it's helped
Building
that.
get now?
Lipstick building's getting, in the 90s to low hundreds.
Yeah, I mean that.
885 Third.
Which unheard of
Right.
5 years ago.
Right.
We were doing
McCann-
$55 nice tenant deals over there. Not anymore.
Right.
And McCann announced, I think, today that they were going to renew at 622, right, which is the Coen Brothers building.
Right, on the corner.
Right, and they're going to stay there. So, I mean, there's commitment to that area.
We brought up the co-working and the WeWork. It's such a large segment of the market. Are we going to have a survival of the fittest? Okay, is it going to be the Regis, where I think Scott made a great comment before, it's like the BlackBerry. They had the opportunity, Regis, and they let it go to the iPhone.
I think they owned they owned the market. Regis did. There was nothing else 10 years ago but
Right.
Regis, and they sort of sat back.
Look, the 75% of the market's controlled by 3 companies, which is Notel, Regis, and WeWork.
Right.
WeWork being the largest provider. There is a need for that type of product in this marketplace. Tenants that want to manage their balance sheet, tenants that don't really want to commit long term, smaller space users. They've all done a very good job on the enterprise side. Notel was really on the forefront of that, focusing on strict enterprise type tenancy.
Explain for my audience what do you mean by the enterprise?
Well, the enterprise side, the end user themselves.
Right.
So they can control their own destiny a little differently than locking into a long-term deal.
Right.
So those spaces
So
become
the
viable.
short-term deal is fine because you can get out of it.
Right.
The other
Right.
problem is that the rents can go up. So you
You pay a little bit more to be in the
You're
space,
buying
but
optionality.
you're buying optionality.
You're buying
flexibility.
optionality. We have that building on 39th Street, 200,000 feet of 1,500-foot spaces. We end up with a lot of people graduating
Right. Right.
from the WeWork who now will go to a 3 to 5 year deal,
Right.
and we'll lease them 2,000 feet. So that they're sort of our feeder. But you buy a little optionality.
New York City is a city where you have small companies who try to operate a business. There are the companies who don't want to go into the WeWork or the Notel. Notel is larger space. WeWork is the room, or the Regis or the Virgo or the other type of people. Where does the small accounting firm, the small law firm, the small nonprofit that you talk about, that you handle, where are they moving and how can they afford to survive in New York City?
We're doing a tremendous amount of business with those people. Now, 3, 4, 5,000 foot tenants, 2,000 foot tenants. They like the loft buildings. You're not getting getting amenity floors and things of that nature, but they can still make $50 deals
Right. Side street buildings in the 40s are still
Right.
doing those.
They
type of
don't.
deals.
They don't need the Class A structure. They need
Are those
The location's great.
right.
Right.
The interesting thing is that the incentives that are needed to go to Long Island City and Brooklyn would really benefit the not-for-profits, right? But they can't take advantage of that because of their status, right? So the tenants that really need it don't really get it.
Right. The nonprofits, they're not going to get any tax incentive to go to there.
But those are the type of buildings that they should and could be in.
Let's talk about a different venue in the nonprofits.
Right.
The healthcare institutions are major tenants. I mean,
Yes.
if you look at NYU
Rebuilding.
with the building on 41st Street between
purchase.
Second over there, it's a 450,000 square foot.
222 East 41st.
Right, and then if you take the Boston Properties building that they've signed the lease for another 250,000 square feet at the former Barnes and Noble.
Yep.
Okay, and then you take people like Mount Sinai who moved into these buildings. Do you see these major nonprofits moving in, and they're signing the 40-year lease, so they don't pay the real estate taxes?
Yeah, you got RXR did a deal with New York Pres at 237 Park, same thing, signing a 31-year synthetic condo, which really takes the buildings off the tax roll. So there are a lot of not-for-profits looking at that type of opportunity, but you need to be big, and there's a lot of small ones as well, that can't really do that.
The more national not-for-profits can submerge themselves in those kind of deals. The smaller ones, the localized ones, are not.
The 5 to 10s they're hard for those type of tenants to do.
But the hospitals and medical facilities, if you go on the Upper East Side, they own.
Right.
They
own
own it.
market. Right.
Well, it's a complete rebuilding of
Yeah.
all the infrastructure of all those hospitals.
What
which
about
is
the life
needed.
sciences? I mean, Alexandria bought a property in Long Island City. Technion Cornell is in Roosevelt Island, which is right off Long Island City. Do you see more?
Solo's commitment on First also.
Yeah.
Right. What on Solo's commitment?
I think Solo's going to do a biotech.
One of the buildings.
In his site that he's had vacant
On the water.
right
on
by
the water.
FDR,
Yeah,
on the water, right.
There's 2.5 blocks of vacant
Right.
land.
It's been a long time, hasn't it?
It's been sitting there vacant for a long
That's
time.
designated as life science.
Yeah.
But I see the life sciences the other. I know the topic is office, but one of the components of office is certain retail. And I think Empire State Retail, they've done some work where they're trying to fix the retail in the building as an amenity to the tenants. Are you seeing more specialty retailers, even like in your building?
I mean, food. I mean, food is an amenity for the tenants, at least in our area. Amazing metamorphosis in the garment district.
Amazing, right?
Well, I'm on that bid board for many, many, many years, and I can tell you it was hard for 5 square blocks to find a place to eat for people at lunchtime, and now we have people actually walking over to Broadway.
1407 Broadway.
Yeah,
that's done an incredible job.
They did a beautiful lobby. They did their amenities.
And then
over.
you're gonna have a great steak. Then you're gonna have whatchamacallit opening up.
Wolfgang's
Wolfgang's
opening in a little while.
Now, what with regard to that? What about the urban food halls? How do you see? Is it too many urban food halls? I mean, they're taking up.
Many anymore. Like, it was a trend. I don't know whether you've seen it in your building.
I don't see any more, but I saw a lot lately up till now.
Right.
No, I think the bigger anchors, as we just said, in that area that's been converted from garment center buildings, we're taking a 100,000 square foot firm from Lower Manhattan that Brian and his team worked on the building side up to that area, and they're loving. We just had a discussion last week about their move management, and they're loving the amenity and restaurants in that whole area, which is great.
Well, you look at Park Avenue South, how it changed. It changed because of the food and the amenities and the quality of life.
Right.
That's happening.
We've
in the
done
Power
plazas.
District.
I mean, I've been on this board for 20. We've done public plazas.
Right.
Amazing things are in the area.
With regard to that, the same idea. Now that we have the Hudson Yards and the Far West Side development, do we see more tenants going to the Herald Square neighborhood?
Yes. If you talk to Scott Clow over at Newmark, who runs the ESRT portfolio, they're having tremendous success at 100 West 33rd. They're having success at 1400 Broadway on leasing because tenants want to go there.
ESRT has turned that portfolio of properties.
We're also
massive.
Midtown now relative to the city. I mean,
Right.
we point over and we go, there's 11th Avenue, here's 7th Avenue. We're equidistant to Madison. We're 8th Avenue used to be the far west. Nothing was really west
Right,
of there.
we
Well, now
went-
9th Avenue is great.
Okay.
9th Avenue is great.
I mean, 440 and 441 9th Avenue, when Scott was in the apparel business, that was a different area. Nobody would go to the neighborhood except for the apparel company.
I was in 528th in Corral's building for 25 years, but they weren't the right 25 years.
I handled it then.
Right.
5058 and 528.
Yeah, I mean,
I cut my teeth on. I know those buildings well.
Yeah, I moved in there when I was 20 years old.
With regard to that,
There was Sunset Diner, the Sunset Restaurant on the corner.
what's
not the-
happening to those buildings on 42nd and 8th,
40,
the Times?
42nd and 43rd Street.
right?
They're being redeveloped and they're looking for tenants. Where the old Show World was and Dwayne Reed on it.
Right.
So that's Kevin Wang is involved in that
Yes.
project, and they're repositioning those assets and they're bringing them to market. It's going to be a pretty cool complex.
But it's also Times Square.
Yes. There's a user
Value
for every
paradigm.
space.
That's right.
It's price.
But it's also going to be interesting what happens with the whole Port Authority area and that whole region.
Right. If the Port Authority, is renovated one, or the other idea that the Port Authority gets relocated to the Javits Center, which is going to change the complexion completely of the area and so on. I think it'll have definitely a different effect on Times Square for the office market because too many people get off the buses over there. So, little current, Apple, you seem shiny. Seems like the business is over there. And 2019 looks at a good time. And I'd like to thank my birthday boys, okay? Sorry, it's not your birthday,
Sorry.
okay?
You could,
We'll share.
I'm going to take the birthday for now.
Okay, I'd like to thank Scott, Brian, and Jim, and I'll see you next week.